Hey, how you doing?
Great, man. How are you?
Good. Hey, it's Lee and Casey from Teton Medicare, and we want to take a couple minutes and answer some of the most commonly asked questions we get from people about Medicare. And so we're just going to jump right into it and ask this question. So Lee, you get the first question.
Yes, sir. Let's go.
Okay, what are the 4 parts of Medicare?
So 4 parts of Medicare you hear mostly about are A, B, C, and D. So with that, original Medicare consists of part A and B. So you pay Medicare taxes out of payroll every single 2 weeks or whenever you get a paycheck, right? That helps pay for, to a degree, your part A and your part B of Medicare. So that's original Medicare. It can help. It's still got plenty of coverages that need to be addressed, big gaps in coverage. So that's where the C and the D come into play. Original Medicare A and B does not include prescription drug coverage. So that's what we refer to as Part D, is to help cover those medications that you're taking on a regular basis. And then Part C is a plan offered through private insurance companies that combine the A and the B and usually improve that coverage in and of itself, as well as include the drug coverage. It doesn't always, but most of the plans, the traditional Medicare Advantage plans or Part C plans, have that drug coverage built in. Sometimes there are plans or situations where someone might not need Part D drug coverage if you've got VA benefits or those types of things. But by far, the majority of people that we talk with need that prescription drug coverage, and so you need that Part D. That being said, we might cover this a little bit later, but there are actually penalties if you go without certain parts of Medicare. So if you go without that Part D, Medicare will say, shame on you for being so healthy that you don't need prescriptions, which I know is silly, but that's what it feels like. So it's always important to talk to a broker like us and understand what those penalties are, what the risks and the pros and cons are, to understand those in and out as much as possible. So those are the 4 parts, A, B, C, and D. Pretty simple.
And then there's this little part that sticks out here that not a lot of people pay attention to, but it's called Medicare Supplement. And so, the original Medicare is A and B and then C and D, but there's also something called a Medicare supplement, also known as Medigap plans. And those sit outside of traditional Medicare, although your parents probably had it, your grandparents probably had it. It's been around for a long time. And they just supplement what Medicare doesn't cover. Those gaps that Lee was talking about, supplemental insurance can help fill in those gaps, but they themselves leave some gaps. They don't have prescription drug coverage, so you have to have a prescription drug plan you add to that. They don't typically have some of the extra benefits that Medicare Advantage plans, so you've got to buy those policies, which we sell those too. They're popular. They're still a good fit for quite a few people, but just a different way of getting coverage.
Yep.
So Lee,
Yes,
is
sir.
Medicare different in Idaho?
Original Medicare is not any different in Idaho. Original Medicare offered through the federal government. It's a federal benefit, therefore it's a federal plan. It's the same in all 50 states. So as far as the A and B that we spoke of just a second ago, that's the same. The Part B premium is the same across the country. That doesn't vary. With that, if you qualify for some state financial assistance like Medicaid, then that Part B premium might be reduced, which can be beneficial for people. But original Medicare itself, it is what it is, right? The coverages, the costs, they are what they are. Where it can get different from state to state are those Medicare supplements and the Medicare Advantage plans, and sometimes the drug plans as well. Not only are those different from state to state, but especially on the Medicare Advantage plans, the Part Cs, those can vary from county to county. So we have people come in all the time that come in and say, well, my sister in Boise has this plan. I want the same thing. Well, we don't have the same plans in Eastern Idaho, where we are, that are in Boise, or same thing in other states. I think last Friday, someone came in and said, hey, my sister's in Oklahoma and she's got this amazing benefit and this, and this, and her copays are this and this. Okay, I'm happy for her. That's in Oklahoma, right? It's a little bit different here in Idaho, and so we have to look at it on a case-by-case basis. And speaking of which, your eligibility into different plans is solely based on your primary residence as to which county you are living in. So you can still travel, you can still use plans elsewhere, but as far as what plans you're eligible for here in Idaho, it's based on which county Medicare and Social Security are showing that you actually live in.
I think that leads to a great question that we get quite often. Is my plan portable? So what if I move from Oklahoma to Idaho, or I moved from Boise to Idaho, or I live in Salt Lake, or I live in Wyoming or Montana. We had a client email us this morning that's living in Wyoming and retiring in a year and wanted to ask this question. So what happens if that client who's in Wyoming now, and we enroll them in a plan in Wyoming, then decides to move to California or to Idaho? What happens then?
Great question for sure. So yeah, Medicare requires you again to have a plan that's available where your residence is. So if you change that residence from Wyoming or Arizona or California to Idaho, then Medicare requires you to get on an Idaho-based plan. So that's a Medicare Advantage, a PDP or a prescription drug plan or Medicare supplement. It's always good to touch base with a local broker to say, hey, what do I need to do now at this point? Now, we specifically, we're licensed in 9 different states, and so we help people that move in and out of the state, especially if you're here in the western states. That's pretty easy for us to do. But yes, you are required by Medicare that you have, when you do move, you have what we call a special enrollment period. So whatever time of the year that is, you don't have to wait till the next fall. If you move in July, well, then you qualify for a special enrollment period in that July and August to make a change based on where your new residence is listed.
Yeah. Yep. Great answer.
Let's see. Next up from all of our fans, all these questions we got, right? What services Medicare does and does not cover?
That is a great question. There's I think we posted something the other day. There's a lot of questions that are out there that people think that, just because I'm on this plan or that, it's the same everywhere. And that is not the case. So let's talk about what original Medicare. So remember, that's Medicare Part A or hospital coverage and Medicare Part B, medical coverage. Those are going to cover hospital costs, doctors, specialists visits, chemotherapy, radiation, drug infusion. Those things are going to be covered. The biggies, the things that you're really worried about. But when I say covered, keep in mind that original Medicare by itself has some pretty big holes. You're responsible for 20% of a chemotherapy treatment.
Yep.
And there's no cap to your costs. You're responsible for your doctor's visits. You're responsible for your specialist visits, skilled nursing facility. Those things are your responsibility. Now, Medicare is going to help you if you only have Medicare alone. But if you just have Medicare Parts A and Part B by itself, that's where you're going to get into some trouble if you have any big expenses or big health concerns. Now, what are some things that they don't cover? They're not going to cover an annual routine, a true annual routine physical. Now, Medicare is going to cover something called an annual wellness exam. And if you've ever had one being on Medicare, it's a piece of paper with a list of questions that your provider is going to ask you. There's no hands-on physical. There's no blood work that comes with that. It is not a true annual physical. Medicare does not cover a true annual physical. Medicare is not going to cover an annual routine eye exam unless you're diabetic, and then they'll do one of those. But a traditional routine where you're covering one eye and reading from the chart 10 feet away, Medicare doesn't cover that. Medicare doesn't cover most times glasses. They're not going to cover preventative or comprehensive dental unless there's some sort of a cancer of the jaw or something like that. And then it's going to be limited even at that. They're not going to cover a gym membership. They're traditionally, it's a U.S.-based healthcare system. So they're not going to cover things overseas unless it's certain things like kidney failure, or sometimes there's a little bit of chemotherapy they'll cover in an emergency situation. But there's some pretty gaping holes in Medicare that we can help fill. We can protect you. We can shield you from some of those things with a Medicare Advantage plan, a prescription drug plan, or a Medicare supplement plan. Yeah,
for sure. And I just want to add, we see people come in that bring in their Medicare and You handbook to try to figure this stuff out.
Yeah.
And from my experience, we've talked about this, but I feel like that book confuses more people than it actually helps. With that exact question, what does Medicare cover? What services are covered by Medicare? It's very unclear.
And it's gotten worse over the years because the plans, they've had the same code statewide, but the plan is not the same here as it is in Boise or in Utah or whatever.
Correct. So I generally tell people to just throw that right in the recycle bin.
Me too.
One of my favorite compliments that we get all the time is, I learned more in 15 minutes from you guys than 5 hours of trying to read through this book and watch different YouTube videos and get this mailer and whatever else just to understand what it is. So we're obviously biased, but talk to a local broker, for crying out loud. Talk to someone that knows what the difference between the Oklahoma plan and the Idaho plan, right? And the Boise versus Bonneville or Jefferson County or Pocatello or whatever the case might be. There's so many little nuances when it comes to what services are covered and what the plans cover and how, that you really need to work with a local broker that's been doing this for 14, 15 years like we have, that know the ins and outs of this. So you really make sure you're getting the most from your benefits and you have the services that you need specifically, because they vary.
Well, don't you find too, this is one that just drives me crazy. I'll have a client come in and say, well, I talked to somebody from a TV ad and they only told me about these two options.
Right.
It drives me crazy. Now, we would, of course, love to be your agent of choice. We'd love to help protect you over the years. But to your point, find somebody who does this for a living. Find someone who knows the area you live in. Find somebody that represents lots of different plans. A lot of those telephone numbers you're going to call are going to represent one or two insurance companies, and that's it. Some of the best companies out there, some of the companies that are going to offer you the best benefits in your area, these national companies, these national telesales centers, when you're picking up the phone and calling a former football star's phone number, they're going to lead you astray because they're not going to present all the options. And that can be really, really damaging.
This is kind of a soapbox topic for me, but yeah. So on that note, if you can at all help it, don't enroll over the phone. Okay, unless you know 100% who you're talking to. I mean, we do some phone over enrollments from people from other states and whatnot when we need to, but they know who we are, and we know they know the reputation that we have.
When they call back, they're going to talk to you.
Yeah, exactly. The problem with these call centers from all over, from these national ads and whatnot, there's zero accountability. You're very likely to never talk to that representative again because they want to sell you something, whether it's better for you or not, honestly, and move on. And they don't answer your phone call when you've got a question about a claim or a certain benefit or whatever else, where when you work with a local broker, you can come to our office, right? If we put you on a crappy plan, frankly, you come call us out on that, which is why we don't do that, right? Because we know if our clients have headaches, we have headaches.
Yeah.
Right. And with those call centers, that's just not the case. So one, they're generally pretty biased as to what they're really presenting. I've even had one lady come in and say, well, they told me they offered this particular local plan. I promise you they don't have a contract with that local plan. They're telling you which one to hear. So it makes it sound like this plan's so great, but it's just not. Yeah. So avoid the phone if you can, because you want to know what you're really getting, and you don't want to have it bite you in the butt. We have people come in all the time that say, I talked to someone, I didn't want to change, somehow they changed my plan. Yeah. Let's avoid that whole mess, right? Not great. Next question. Let's see. How do I know if I qualify or if I need Medicare?
Oh, wow. So that is, to me, one of the shocking things that people who are becoming Medicare eligible, whether that's for a few different reasons, we'll go over in a second, that just aren't aware of it. And so we could give you a list a mile long of reasons and opportunities, but I'm going to give you the most common. So most people are going to qualify for Medicare when they're turning 65. That's going to be the vast majority of people. When they turn 65, they're going to be eligible for Medicare. The other one is if they're on Social Security disability for 24 consecutive months. Okay, and so keep in mind that you might be a 40-year-old. You might be a 50-year-old. You might be a 55 or 60-year-old and on Social Security disability for 2 years. Now you're going on to Medicare automatically. That's just going to happen. Yep. Another one to keep in mind, if you've applied for Social Security disability and been turned down, and then let's say you go get an attorney or you apply again and you get approved, they're going to backdate that approval back to when you first applied. And so I've had clients that walk in the door and say, hey, listen, for some reason I got this Medicare card in the mail. Like, when did you apply for Social Security? Well, it's been a couple years ago. Ta-da, that's why you got it. So that's the one. But the most common is when you're turning 65. Now, keep in mind, if you're still working, you're still on an employer-sponsored plan with at least 20 or more employees on that group plan, and it's considered creditable by the government. That means it's at least as good as what Medicare would offer. Then you don't have to do anything. So we have a bunch of clients, and one of the big employers in our area is a government site. Right? It's a private contractor, but it's a government site. And tons of our clients are eligible for a group employer plan, and they continue to work to 66, 67, or even sometimes 70 or plus. Yep. They stay on that employer plan. They never sign up for Medicare during that period of time, staying on their group plan. No penalty, no problem. They can apply for Medicare as soon as they decide when they're going to retire, and that's okay. Now, if you're on a small employer plan that doesn't offer health insurance, or it's 19 or less employees, then you got to sign up for Medicare. You have to do it. And there'll be a penalty. And unfortunately, we have people we meet once in a while that didn't do it, and that penalty is for life. Yeah. And it stinks because it's not a small amount of money. We were talking about our meeting today. One of our agents, I think he said to someone who hasn't had a Medicare prescription drug coverage for 15 years. Yep. That penalty is about $75 a month for the rest of that person's life if they ever sign up for a prescription drug plan. Yep. They had no idea. Yeah. They thought, I'm healthy, I don't take drugs, why would I need this? And then they never talked to a broker. Never talked to a broker. Advice. Yep, exactly right. Yep, for sure. Okay, perfect. Okay. Ask away, brother. Let's pick a hard one.
Do it.
Can you disenroll in Medicare if you go back to work at 65?
You can if you want to. So we've been doing this for over a decade, and it used to be that if you could stay on employee coverage, group coverage, it's the end all be all, so stay on for as long as you can. That is no longer the case. I would say 80% of the time, roughly, when someone comes in and we say, let's compare apples to apples. Let's look at your options. We're not going to make any assumptions.
Yeah.
Let's make sure this makes sense. We look at your plan from your group and exactly what it costs, what your deductible is, your max amount of pocket, your extra benefits, and compare that to some of the Medicare Advantage plans side by side. Now, about 80% of the time, we're seeing people say, oh, well, why would I stay on my group coverage if I can come on this Medicare plan, pay less, have sometimes no deductible at all,
right,
and better dental or whatever the case might be. So pretty common now that people are saying, well, even if I could go back, I probably wouldn't.
Yeah, I remember
why
back
would
in the day,
right?
somebody would had mail handlers, or they were on a pipe fitters, a union plan.
Right.
As soon as they walked in the door, like, hey, nice to meet you. We'll be here when you retire. Or when you think about leaving that. That's not the case anymore. I mean, I have people that work for a large hospital, you do too, that are nurses or even physicians that are employees that are not taking their insurance from their employer. They're coming to us and we're helping them with a Medicare Advantage plan or a supplement or something like that. They're still working,
right,
but they're choosing to leave their their group plan to come on a Medicare plan because it is so much better for them. Yeah, it's the norm now.
For sure. So you can disenroll from Medicare if it makes sense, but please don't assume that it makes sense.
Yeah.
Again, let us look at it and we'll compare apples to apples and have you're making at least an educated decision on that, but less and less it's becoming a realistic situation where you need to.
Well, and all of our agents, one of the things I love about our office, we'll shoot you straight.
Yep.
I've had people refer their friends and family to me because I've told them not to do something.
Right. True.
They're like, well, I thought I'd come here and you try to sell me something. Well, in your case, it's better to stick with what you've got. Come and see me when it's not.
Yep.
And let's check in every year or so. So, yeah, I agree with that. All right.
Perfect.
Does Medicare pay for nursing home care or assisted living?
Ooh, good question. So what Medicare and Medicare plans will cover is generally skilled nursing facilities. Right? So meaning it's more of a short-term situation. You have a hip replacement, you have a stroke or whatnot, and you go into an assisted living or skilled nursing facility. Medicare plans will normally cover that up to 100 days. There's a cap on that. Most Medicare plans will actually cover 100% of that cost for the first 20 days as of 2024 right now, okay? But then you have some costs for the remaining days up to 100. But for that, there needs to be progress being made. You're rehabbing, you're getting better, and you're working towards going back home, right? That's the difference between skilled nursing and long-term care. Long-term care is, hey, you're going there for the rest of your days.
Yep.
Whether that's 6 months or 6 years, whatever the case might be. And Medicare does not cover that long-term care protection. So that's usually a separate policy one way or another, whether that be a long-term care policy. There are some other products, some life insurance products, annuities that have some benefits that you can use to help cover and pay for long-term care. But Medicare itself does not include that benefit.
What about home health care? What if let's say I had a hip surgery, use your example.
Yeah.
And I've come home and I need some nursing for a few days to check my wound and that kind of stuff. But then I have a spouse who can't lift me, can't move me, can't do the dishes. What happens in that situation?
Yep, good question. So, yeah, Medicare plans will cover home health care. And in fact, usually it's actually covered 100% by most plans. So, yes, if you're needing rehab, care, things you can't do at home, it's not custodial care. It's not to come in and do your dishes for you and do your grocery shopping for you, right? But if it's to help you with your medications, it's to help you do your physical therapy, those types of things, Medicare plans generally cover that pretty generously.
Yeah, I think I agree 100%. They're generous. And one of the things that over the last few years, we've really identified in our agency is there are plans that are very reasonable monthly that can help with those skilled nursing costs, that can help with a cancer diagnosis, that can help with some of those extra things that you might incur. But for those first 20 days in a skilled nursing, there is no cost to you in most cases.
Yep.
I want to really point out, though, you said something that's really important. A lot of people say, well, I've broken my hip and I've had a hip surgery. Now I'm in skilled nursing. If you go into a skilled nursing facility and you are not progressing, or the facility says they don't see you progressing, they'll kick you out. So
true.
you've really got to protect yourself. And again, there's life insurance products, there's annuities, there's long-term care policies. We help people with those policies to protect them and shield them from those events.
Yeah, absolutely. Okay, Mr. Peterson.
I'm gonna cough.
Let's see. I'm a veteran. What insurance should I use?
You look like a veteran.
I'll take that as a compliment.
Yeah, that is a compliment. So fantastic question. And this is an area, there's just not enough knowledge out there. There's not enough people that know that there are some fantastic plans that can help veterans. I want to talk about, there's a couple of scenarios. Now, if I'm a veteran or I'm somebody who's retired from the military after a lifetime career, I'm going to have something called TRICARE for Life. If I'm so grateful that we give this to our veterans and the people that serve. They deserve it and so much more, but it is a fantastic plan and it's going to cover most things. Now, that doesn't mean we don't have plans that can supplement that and give them additional benefits, which we do that quite often. But if you're somebody who's got TRICARE for Life, you're most times in a great situation. Still come and talk to us. Let us kind of make you aware of some of the extra benefits that are out there for you, but you're in a good situation. Now, if I'm a veteran and I served active duty for a few years, but retired after just a couple of years, I probably am not going to have much benefit as far as health insurance. So there are some plans that work, and there's actually plans that are specifically made for people in that situation. They're going to give them unbelievable benefits at a very, very low cost. And they're going to work in the system. Now, here's what's great about people who are veterans. You have really two systems. You have the veteran system that you can go to all the facilities that the VA offers, all the benefits the VA offers, including prescription drug coverage. And then you're going to have Medicare and either a Medicare Advantage plan, a supplement, or a prescription drug plan that works in conjunction, separate, They work at the same time, simultaneously. So you really have two systems to work in. But if you're a veteran, no matter how much you served, if you were active duty, if you're a retiree, or if you were, what's the other one? It's losing my mind. I left my mind right now. National Guard. Right? If those are people who should really come and talk to us because there is probably a situation that we can help you with.
Yep. Good answer. Couldn't have said it better myself. How about, does Medicare cover dental?
No. In most cases. So like with most things with Medicare, there's always these little caveats.
True.
And if you get that book that I also tell people to throw in the garbage and you look through it, or you go to Medicare.gov, which is a good resource, by the way, but kind of hard to navigate, Medicare.gov will tell you there's specific situations where there's some dental. And again, referencing what I said earlier, if I have jaw cancer, and that's one that comes up to my mind, I'm sure there's other situations, and there's something that needs to be reconstructed, there's some work that has to be done. In that case, sometimes Medicare will cover some of those costs, but here's what you're going to find. They might cover to reconstruct the jaw, but if you have to have a bridge made or something like that, they may not cover that.
Yeah.
So in most cases, definitely not preventative. Medicare does not cover preventive dental, and in most cases, they're not going to cover crowns, root canals, cavities, that kind of stuff. Periodontal.
Right.
Most times. And you'll notice that you and I both say this. We'll say these little caveats, these little asterisks next to it, because there are situations I'm sure that Medicare would say yes, but its vast majority is going to be no.
So how do you get dental?
Fantastic. So there's a few ways you can do it. The Medicare Advantage plans, many of them have great dental insurance that's included. And when we say that, they're going to include it for very little cost. Some plans, it's minimal coverage. Some plans, it's pretty robust.
Yeah.
What we do see, and Lee and I will tell you this, what we do see in the coming years, that included benefit is probably going to diminish a little bit in the coming years. And so that's where the second option comes in, and that's what we call a standalone dental plan. And we've got some fantastic insurance companies that will offer coverage. They typically run off of what we call a PPO chassis. That means that you can get coverage throughout your state in most cases. You have to find dentists that take it, but they're pretty robust lists of providers that dentists that take it. So a standalone dental plan is a really great option. And we even have people that are on a Medicare Advantage plan that still add a standalone dental to it to supplement that coverage.
Get even more.
Yeah, get even more. Or an employer. So we'll have people that say, hey, I'm going to continue to work. I'm going to stay on my employer plan, but I need some extra dental now. Well, we can help you with that now, and that just sets you up in a better situation when it's time to go on Medicare.
Love it. Love it. Perfect. While you're coming up with another question, I was talking to someone this morning. I would advise that there's a lot of shiny objects right now in the marketing that's out there for Medicare and health insurance. Shiny objects as far as these flex cards or grocery money or dental and whatnot. And there definitely is some value to that. So I understand that completely. The problem is sometimes people get so focused on those shiny objects, they enroll in a plan for that, but then they realize, oh shoot, my doctors don't accept this plan.
100%.
Or this company's terrible at processing claims, or they deny a lot of claims, or they don't get my prior authorization in a timely manner and whatnot. So I would advise, if you need dental, again, talk to a qualified, experienced broker, whether it be dental or anything else, but don't just see some commercial on TV or some mail piece that looks really official and think, oh, I want that. I'm going to call and change to that plan, because you might be completely messing up your really important stuff. Well, if you've got a hip replacement scheduled for 2 months down the road or whatever, but you changed your plan for an extra $500 in dental, well, you really just did a disservice to yourself.
I'm sure you've had this. You've had clients that will come and say, well, I chose that plan because of the gym membership.
Right.
And I want to say, are you serious? Right? You made a decision off of probably it's been proven in the retirement years, medical costs can be the most expensive part of your retirement. And I find people that make decisions off of their gym membership, which I understand the value of it.
Sure.
Don't get me wrong.
It's great.
I 100% understand the value of it. And we have fantastic plans that have fantastic benefit. But if you're making your decision off your gym membership or your $500 extra of dental, you probably didn't get good advice. Right?
Yeah. So we try our hardest to focus really on overall member experience, right? We want an awesome network of doctors, lots of choice for you as to where you can go and when you can go. And we want obviously claims to be paid, right? Just like you do. No one likes getting a letter saying your claim has been denied or delayed or whatever the case might be. Your prior authorization for that surgery or MRI never got approved or submitted or whatever else. So avoid all that by, again, working with local brokers that say, here's who's going to give you, based on your needs, the overall best package for the big stuff and some of those extras sprinkled in there too.
Yeah, I think you kind of set up the next question I want to ask you, because we've kind of brought it up a couple times. Tell me what a broker is. And if I have a friend who calls me from another state and said, hey, I need to give my mom or my dad or my grandparents or my neighbor advice, who should I send them to? I would tell them to go to a broker, but tell us what a broker is and why. Great
question. So a broker, which is what we're independent, which means we don't work for any one company. So you come in, unlike some of those telemarketers that basically only have access to one or two companies, we work with all the competitive companies in the markets that we serve to give you the most option, the most choice possible, right? So we're contracted with, first of all, we're licensed, we're certified, and then we're contracted with multiple companies to be able to offer their services and their products, to represent them and say, hey, based on the prescriptions that you've listed, based on the doctors that you're seeing, based on your need for dental or whatever else, here are the different plans that might be a good fit for you. Let's compare those side by side, apples to apples, so that you can make the decision as to what plan you want to be on, versus someone that's an agent for a company. Actually, both of us started our careers in Medicare as agents, both working directly for an insurance company, different companies, but same thing where we represented that one company. It's all we could help people with. Mm-hmm. Where now, and for the last 7, 8, 9 years, we've both been independent brokers where we want to say, we want to offer all of these options. So we have no bias.
No.
Right? The reality is we want happy clients. Happy clients stay with us year after year after year, and happy clients send us their friends and their family.
Yeah.
Because we've earned that trust, right? So that's the priority for us, as being independent brokers, is saying what makes sense for you may not make sense for our next appointment or next client. And so let's
husband and wife.
Or husband and wife. Very true. Good point. So it's nice to be able to customize those conversations and the products that we enroll people in, so they're getting what they need versus what we're trying to push on them.
Yeah. I 100% agree with you. The one thing I would add to that is, with you working with a broker, with us, you're not paying more.
Good point.
So we have people who say, well, and I love this because it tells me that they're considerate of my time and considerate of the experience that I have, but they'll say, well, what do I owe you at the end of the appointment?
Right.
Because we'll present them a Medicare plan that has no monthly premium, and it comes with the dental, vision, hearing, all that kind of stuff. And then we add a couple other products that's, $50, $60 a month. And like, well, what do I owe you? How do you get paid? Well, you don't owe me anything. Right? The way I get paid is very similar to your property and casualty agent, your auto home agent, is they're going to get compensated by the insurance company. But if you go with us and you use us as your resource and to rely on our expertise, you're not paying any more. We're getting paid by the insurance company a small amount per month per person to be able to be that resource for you throughout the year and throughout the years.
Yep.
And so keep in mind that you're not paying anything more to us by using us. That money comes from the insurance company and it doesn't cost you any more.
Let me just add one thing. 100% agree. Let me add one more level to that. We do get paid a commission. Costs you nothing, right? It's not a big commission. It's not like selling a house or a car. It's this big thing where we're just trying to push something on you to get a sale. It's a pretty small amount. So we have to have a lot of clients for a lot of years to really be profitable. So that's again why it goes to the point of we want happy clients to stay with us for a long time, which means we service our clients. You have questions, you got a letter you don't understand, you need to review your plan, or you forgot how this benefit works, you can reach out to us. We continue to work with you, not just during the enrollment period every fall, but all the time. So that we provide that value, doesn't cost you a dang thing. So whether you go figure out all this stuff on your own, still be confused, right? Or you come work with a local broker like us, your cost is the exact same. So pretty easy.
Yeah, I love it. Okay, what do I need to know if I'm signing up my parents or my grandparents? What are some key things you would tell someone that says, hey, I'm helping my mom and dad, I'm helping my grandparents, I'm helping my aunt and uncle, my husband,
Sure.
which we get all the time, right?
Sure.
We get a wife that calls and says, hey, my husband's working, he asked me to call. If you have somebody who says, hey, what do I need to do? What would you give them as maybe two or three ideas? Here's the steps I would take.
Well, I guess it depends on really what the question is. I mean, again, what we do is, first of all, we sit down with our clients, or if it's over the phone, either way, we get a pretty in-depth background as to what they've had, what their needs are. It's not a one-size-fits-all, folks, right? So it's really a matter of understanding where you're coming from and what you need. And based on that information, then we can say, okay, what's the time frame we're looking at? And therefore, here's the process to enroll in original Medicare. Are you receiving Social Security already? In which case, your enrollment into Medicare A and B is automatic. You don't have to worry about it. So it's just a matter of really understanding. We take the time to understand what that looks like for each individual, rather than just saying, trust me, you want this plan, here it is, sign here, let's move on. No, this is a personal thing, right? We want to get your retirement or your Medicare right the first time as much as possible. So having that background information is pretty critical. I actually really like it when a family member helps, because it gives some extra perspective on what they need and what these plans look like and how well they work most of the time for these clients. So I like having those conversations with people, but really it's just a matter of understanding their situation and then saying, for that, here's what it looks like. For that scenario, here's probably what needs to happen. So again, whether it's enrolling in original Medicare, comparing the supplement to the Advantage plan, going through those details and giving them peace of mind and confidence so they know how to use their plan and get the most out of it. I think it's a big deal, but that's our bread and butter.
Well, and people say, well, when should I call you? When should I reach out to you? And the simple answer is today. That doesn't mean, like, I'll give you the example. The gentleman that reached out to us this morning that's in Wyoming, he's not retiring till April of next year. He's fully almost 11 months from being retired. And he's going to keep his employer plan. He doesn't need any help for Medicare, but he wanted to start now. And we're like, great. We called him, said, let's talk. It's a year out. Let's give you some advice. Where we have people once in a while, they'll call up and say, hey, listen, I'm retiring tomorrow. Well, today's the 30th of April. Well, I've been 65 for a few years and I'm eligible for Medicare. Okay, well, we got to hustle. That's okay. We're here to help you. So the answer to the question is, when should you reach out to us, is today. If you think it's too late, don't think that. If you think it's too early, don't think that. We'll guide you and really help you to understand, okay, here's your next few steps. We'll put you in our system to follow up with you. You can follow up with this when you feel comfortable. And we make it very simple. You want to text us, you want to email us, you want to call us. You want to go to our website and watch videos that we've done, or have our fax page, or FAQs, you can do that too. We make it simple. So Lee, one of the questions we get, because we do offer other services, we do help other people, we protect them in other ways. And one of the biggest questions, especially with the volatile rates that have gone on and people's retirements, they're looking at those funds, is what is an annuity? They hear these terms. It's a pretty innocuous name with not a lot of detail. I mean, if I say term life insurance, most people kind of understand what that is, but annuity, what is that?
Good question. So annuities are actually most of the time a life insurance policy or product that's got some financial product aspects built into it. Again, they're very personalized products and policies that we take a look at for people. There's really three main types of annuities specifically. There is something called a variable annuity. We personally don't do that. You have to have additional certification for that. That's not why we don't do it. The biggest reason we don't do it is because they're more volatile.
They're variable.
Right? They're variable. They can go up, they can go down. You can lose money. We don't like our clients losing money if at all possible. So we don't do the variable, which if you've ever heard something bad about an annuity, I had an annuity 20 years ago. My dad had an annuity. It was terrible. It was probably a variable annuity. That's why it was terrible, because it lost money. We don't do those. Okay. The two that we do help people with on the annuities are fixed and fixed indexed annuities. So a fixed is kind of like a CD from your bank or your credit union. You get a guaranteed percent rate of return for, it's a year, a 3 year, whatever it is, depending on your situation and your needs. They lock in a rate with about 5% or whatever it is for 3 years. At the end of that 3 years, you can take that out. You can roll it into something else, whatever the case might be. But with that, you generally don't access that money. You know you're putting that away for those 3 years in that example, but you're going to get a 5 or so percent return on that money. The other one, however, that we do even more is called the fixed indexed annuity. So with a fixed indexed annuity, the floor is fixed, which means you can't lose money, right? And we love that. Zero is your hero, right? So when your friends are losing 10, 15, 20% when the market poops out, you're losing zero.
Yep.
Right? You are keeping your money. And that's a big deal for the people that come into our office and say, okay, I've built up this nest egg for my retirement, whatever that is. My number one priority now is to not lose it. I don't have time on my side to gain 30% back over the next decade or 15 years. I need to protect that money. So a fixed indexed annuity allows people to, one, protect that money. The indexed part of that annuity means that the money, it's not put into indexes or specific stocks, but the growth is tied to different indexes. So for example, the S&P 500, we've probably all heard of that, right? So if the S&P 500 goes up 10% in the year, you get to participate with that growth. So what I'm saying is you get upside without the downside. There's no risk of losing money, which is a really big deal.
Yeah.
Right? So rather than just getting a small percentage in a CD or a fixed annuity, which sometimes might make sense depending on the situation, but a lot of people say, hey, if I can protect it, no, for 100% surety, I'm not going to lose a penny. But if the markets do great, I want to participate in that growth. I want that nest egg to grow. So that's what a fixed indexed annuity does. They are very customizable depending on exactly what you're needing out of it. So we talked about long-term care. There are some that have a benefit that helps pay for long-term care, right? That's pretty awesome. There are some that you can leave in for 5 years or 10 years or whatever the case might be. One that we do a lot of is actually a lifetime income benefit annuity. What that means, you let that sit for however, a year, 5 years, whatever the case might be. But when you want to turn on that lifetime income, it's like turning on a pension.
Yeah, exactly.
Right? You turn on that valve and all of a sudden you're getting a monthly check for the rest of your life. Now you can do it. You can set it up where hey, we only need that income for the next 10 years. Okay, so be it. But a lot of people say, I don't want to outlive my income. I want to keep that money coming. What if I live to 100 or 105 or whatever the case may be? I want that money to keep coming, and it pays you for life, which is fantastic. What's fun about those two is as the value of your annuity goes up, it can't come back down. So I mentioned the floor is zero, but when it goes up, well, that's your new floor.
Yeah.
And when it goes up again, now that's your new floor. It's not going to go back to where it started initially. So as things go up, it's just a fantastic way to protect your income and to see it grow over time as well.
Well, I love that example because when clients are asking about it, they'll say, well, what if my $100,000, let's say they did $100,000 because it's easy math. Let's say that I grew to $110,000 in a year. Well, what if the market crashes the next year? Do I lose that $10,000 that I've increased? You don't.
Nope.
That's your new floor. And so you can tell that the two of us get excited about this for lots of reasons. If you think about it, we're coming in contact with people who've worked their whole lives. They've done all the hard work. And now it's time in the last 4 years, right, for them to retire. And what has happened to the market?
Right.
We've had these boomer years, these great things that have happened, this market that's just gone like a skyrocket. And then what happens? It drops. And if they're ready to retire at that time, it's terrifying.
For sure.
And so for us to be able to have that solution for people and give them that protection, that shield like we've talked about before. Talk about a good news appointment.
Yes.
When someone comes in and says, hey, I've got this amount of money. I've got 20 or 30 or 40.
Yes.
We've had people that had millions of dollars, right? And they said, I want to protect this money.
Absolutely.
I love that.
Another cool aspect of the annuities is going back to the question a minute ago, as far as, how we get paid and that kind of stuff, what it costs you. One big difference with annuities, we get paid a commission, okay? Full transparency there. But unlike your broker that's handling your money in the stock market, your financial advisor, they're usually taking 1.5%, 2.5%, 3% every year of your money. It's coming out of your account.
Plus a transaction fee.
Plus this fee, that fee, this fee, that fee, all coming out of your account balance. That does not happen with annuities. So the commission that we receive is a one-time commission, and it's the insurance company saying, thank you, Lee or Casey, for helping this individual understand these options, helping them fill out the paperwork and get enrolled and get it all set up. But that does not come, not one penny comes out of your account balance. So that $100,000 example, yes, we get paid a commission, but your balance is still that $100,000.
Well, and because of the way that the market has been, there's some of these policies, these annuities that are giving you what they call bonus money, and we could talk about this for hours.
Yep.
But that bonus money, just had a guy in the other day that had closed another account and was moving some money over to an annuity that we're looking at, and he got 8% bonus on his money from the insurance company. So they took his, I can't remember how much. Let's just say again, using $100,000. I don't think it was that amount, but let's just say it was. Now he gets $8,000 added to his money. And so I love that. One of the things that I really like, and I've helped some family members with fixed indexed annuities, is the long-term care benefit. That long-term care benefit, if you have somebody who can't qualify for traditional long-term care because of their health, this is a great feature. If you take some what we call lazy money sitting in your CD, and CDs have done well, no poo-poo on those, but they're coming down. Rates are coming down, and they probably will continue to come down. If you've had some lazy money in a money market account, or just the ones that blow my mind, they're just sitting in their savings account getting 0.15%.
Ouch.
Great. They can move that money into a fixed index annuity, protect themselves, give them lifetime income, and a long-term care benefit. So there's a lot of options. I love what you said. These are highly customizable. If there's ever been a product that is specific to a person's situation, I would say annuities are that product.
Yep.
Very, 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 very special.
Absolutely. Yep. Easy.
Okay, you think we've covered that good enough?
I think so for annuities.
Yeah, I think so too. All right. And you talked about fixed indexed and talk about just life insurance. And of course there's term life, whole life, IULs, GULs, there's all these different terms, but I think let's stay specific and kind of maybe grassroots. Let's talk about what is term life, what is whole life.
Yeah. So term life is what it sounds like. There's a term, amount of time associated with that particular policy, right? So if I actually have two different term policies on myself right now, if one of those is a 10-year term, I pay my premium, $50 a month, whatever it is, for that 10 years. The end of that 10 years, if I am still living and have not collected that benefit or passing away, that policy expires.
Gone.
It's over. Okay. So the good and bad of a term policy is generally the premium is more affordable.
Yeah.
Because they know, the insurance company realizes there's a pretty good chance I'm going to live more than 10 more years. Right. So, but that insurance company has made that $50 a month for the last 10 years, and they keep that premium. Okay. So it's a gamble. I might get something back. I might not, but it's an affordable way to get life insurance and to protect your family. So again, I have two term policies myself. I'm a fan of them at this stage of my life. But a whole life policy is a policy that's good for your whole life, right? So meaning it does not expire at the end of so many years. The premium is generally locked in, and so it doesn't increase. The benefit does not decrease over time. You're saying, hey, I'm going to pay $100 a month for the rest of my life. And if and when I die, whether that's next week or when I'm 102 years old, my death benefit is such and such dollars. That does not change over time. So some people like having that guarantee and knowing exactly what that premium is and what that death benefit is, and it doesn't fluctuate throughout time. So with term policies, The underwriting or the qualifying for it's generally a little bit easier. There's generally some medical questions depending on the policy, the situation, the age. There might be a minor exam by a nurse or whatnot that comes to your home or office. Whole life policies, generally speaking, perhaps a little more medical questions.
They look at you a little harder.
They look a little closer because they know at some point they're going to pay out.
Yeah.
Right. So there's a little more risk there potentially. But there's also probably the whole life policy that we do the most of at our office is what we call more of a final expense whole life policy. What that means is someone doesn't need $100,000 or $500,000 death benefit. They're saying, hey, I'm 70 years old. I'm 65 years old. When I pass, I don't want to give my daughter and her family that burden, that financial burden or whatever else. So I just need a $15,000 or $20,000 policy, not a huge benefit, but enough to cover those final expenses, final medical expenses, less bills that need to be paid off. If you want to leave something for fun money for your family or loved ones, you can do that. And again, those are a little bit customizable as well as far as exactly the amount you want. But we do those quite a bit. Just to make sure that things are covered when we do pass, because it's going to happen.
Well,
we all pass.
Go back to your point. So those are what we call simplified issue. So again, usually we're asking the questions that qualify the people for those policies. So they're usually easier to get. And we have lots of insurance companies that we can offer that. But there's some really great insurance companies that if we gave you the names, you'd have heard of them before. They're big companies, been doing it a long time. The other thing I think people forget about when we talk about final expense plans, what if you have a family member who wants to come to your funeral but can't afford? Right? If you have a final expense plan that covers your burial costs, but also leaves a little bit of extra money to pay for your luncheon or pay for travel expenses for some of your family, it's a great need. And a lot of people say, well, I can budget, I don't know, $50, $60, $75 a month for the rest of my life, or 30 sometimes. It depends on the dollar amount you want to buy. Much more than I could have asked my family to come up with 10 or 15 or 20. The average funeral, I just talked to a client the other day, they thought it was going to be about $8,000 or $9,000, and they went pretty basic. It was $12,000.
Yep.
That's now. If you're cremating and doing other things, you already got your burial plot. It might be a little bit less.
Sure.
But an average funeral is going to be $10,000 to $12,000, $15,000 pretty
Absolutely.
quickly. So, okay. So while we're on the subject of life insurance, tell me about cancer policies. When we hear the term cancer policy, I'm not sure that people really understand what that means. So what is a cancer life insurance policy?
Absolutely. So it's a standalone plan. So it doesn't matter if you have an Obamacare style plan or a group plan from your employer or a Medicare plan or whatever else. It makes no difference, okay? A cancer plan is a standalone policy that you can have in place that if, heaven forbid, you're diagnosed with some form of cancer, normally internal cancers, depending on the specific policy. But if you're diagnosed with an internal cancer, that policy sends you a lump sum check to put in your personal checking account to use however the heck you want.
Yeah.
Right? So that's one difference with the plans that we offer. There are some plans out there that will reimburse you or will pay based on what doctor you go to or what type of treatment you choose to go.
Reimbursement.
Yeah, all this paperwork and stuff. That's not the policies that we do. It's a lump sum benefit. Heaven forbid you're diagnosed. And we all know people who have dealt with that, who have passed away from it, unfortunately. But that check, let's say, the probably most common benefit amount that I write personally is probably about $15,000. Okay, $15,000 to $20,000 cancer benefit. Meaning, if you are diagnosed with an internal cancer, that policy sends you a check for $20,000.
Yeah.
Doesn't go to the doctors, doesn't go to the pharmacy or the cancer center. It goes to you to use, again, however the heck you want.
Yeah.
So obviously it's designed to help pay your medical bills, right? If you've got a maximum out of pocket of $5,000 or $10,000, it can obviously pay those medical costs. But there are a lot of other costs, right? Your prescription drugs, flipping expensive when it comes to cancer. In addition to the treatments, right? The chemotherapies and whatnot. But you can also use it for, again, travel, right?
Wheelchair ramp.
I'm modifying this. I had someone say, well, I'm going to use it for, I lost all this weight doing chemo for 6 months. I need a whole new wardrobe.
Yeah.
Well, you don't have to come up with that money. You've got it in your checking account from this policy, right? You've also had people say, well, depending on the form of cancer and the stage of cancer that it is, what if I don't want to do treatment? If that, I mean, that's your right, of course, to not do treatment. That's complete between you and your family. Okay, you still have that money to go do something else. If you want to make a lasting memory, it's one of the last things you do, and you want to fly your family to Hawaii. You know what? It's your dang money.
We had a client say, I'm going to buy a new truck. I'm like, well, if you can find a new truck for 30, then let me know how that works. But
Yeah,
but
seriously.
he had a $30,000 price. I'm going to buy a new truck. I'm like, hey,
If that brings
it's
you
your
comfort
money.
or joy or whatever the case
Yeah.
might be, absolutely. So I actually have a plan we talked about this just this morning. I have a $30,000 cancer policy for my family of 6, my wife and my 4 kids. It's a $30,000 policy. It is not expensive.
Right.
Not expensive, but 100% worth it in my mind, because if, I'll just use myself as an example, if I'm diagnosed with some form of cancer, there's going to be emotional stress. The physical stress, obviously, of going through treatment or whatever I decide to do, right? The mental, the spiritual, all those types of stresses. If I can eliminate that financial stress,
Yeah.
that's one less thing to worry about. And when all that stress can add to your ability to heal and recover, why not eliminate some of that stress? And a very affordable cancer policy does just that.
What we find too is in our office, we help one of the largest cancer centers in Southeast Idaho. We're helping their patients many times a week. We help some of the hospitals, some of the kidney centers in town. And so if you find that we're very passionate about this, there's a few reasons. I've had family members pass away from cancer recently, and in my past, I've known lots of clients that got cancer. I just got a call last week from a client. Her husband got cancer, and luckily, we helped them with a cancer policy last fall. But we're passionate about it because we see the effect of it. We see that for a few dollars a day, a few dollars a month, you can have that peace of mind and really put yourself in a position to protect you and your family. And we've got some fantastic insurance companies that have been doing it a long time, and they're easy to deal with. And we can do it. We can help people with a cancer policy in about a half an hour, if not less.
Yeah. And we had someone come in just last week who needed to file a claim, who was diagnosed with breast cancer. We printed out 2 pages to take to her doctor to have fill out and submit it, and she's going to get a check in a couple of weeks. Like, it's not a big complicated thing. And so again, when you need that peace of mind and that financial support, it is there for you if and when you've got that cancer policy in place. We're big fans, if you can't tell.
Big fans.
Casey, another question we get all the time is, hey, I'm not 65. Can you guys help me?
Yeah. Well, I want to answer that question, but I want to answer a question you didn't ask, because we have clients say, well, it's Teton Medicare.
Yeah, it's true.
Right. Where does people who are not 65 or not eligible for Medicare come in? And listen, we've both been helping people with Medicare plans since 2009, 2008. So we've been doing that a long time, but we've been helping people with under 65, Obamacare, ACA, group plans, small group, medium size group, access plans. There's all kinds of different plans that are not Medicare for health insurance. And we've been helping people with those for quite some time. And so just because it says Teton Medicare, don't think that we don't have some fantastic. We have agents that do that all the time. We have agents that are bilingual that do it. So Spanish-speaking agents that can help our clients, fluent Spanish speakers, so we can help. So let's talk about what your options. So there's a few terms that are used. ACA is a very common one that's thrown around in our circle. That's Affordable Care Act. That's Obamacare. So a lot of people will call it ACA. That's Obamacare.
Yep.
So, and you've got different names for that even. You've got exchange, on and off the exchange. You've got all these things. But we could give you 5 or 6 or 7 different names for it. It's under 65 insurance for people who need health insurance. And there's all kinds of options. You're going to hear the metal plans. So gold, bronze, silver. The thing I'm going to tell people is, when you're looking for health insurance, go back to what you said earlier in our conversation. Come to us, ask us questions, let us answer them for you. Because there are some stipulations. If you are offered an employer-sponsored plan and you deny it, you decline it, that's going to affect the cost of Obamacare, believe it or not. If you are in between enrollment periods, that's going to affect when you can enroll. So there's a lot of different nuances that we're going to help you with. One of the things to keep in mind is that those plans can be very, very, very expensive. I remember a husband and wife that were 63 and 64 years old. They weren't quite eligible for Medicare. They were paying $1,700, $1,800 a month. Well, why is that? Their income was really high.
Right.
Or maybe they didn't talk to an agent or broker that could help answer the question if they qualify for what we call a tax subsidy. So let's talk about when you have an Affordable Care Act, Obamacare, there's something called a tax subsidy. And I'm going to be very untechnical for a minute, so don't hold me accountable to this. But when we talk about a tax subsidy, basically what happens is the state and or the federal government are helping pay your premium. And in some cases, they're actually bringing down your cost out of pocket as well.
Yep.
So based off of your income, we have clients all the time that have a family of 2 or 3, and they may pay $80, $200, $300 for a fantastic plan for the coverage. Then you'll have people that are in the same situation, they'll pay $0, or they're paying, like I said earlier, $1,700, depending on their situation. So what is an Affordable Care Act plan, or ACA, or Exchange, or Obamacare? It's health insurance for people who are not on Medicare. And that's an important point to point out. That's a lot of points. That's a lot of.
Make your point already. Let's go.
Let's point that out. So if you become eligible for Medicare, and let's say that you're on an individual plan, Obamacare or something like that, once you become eligible for Medicare, you lose any subsidies you had. So most companies, at least in Idaho, they're going to kick you off anyway.
Yep.
Some other states, that doesn't happen. They'll have you keep going on the plan, and now you're paying for a plan that you do not want. If you're eligible for Medicare, you need to come off of an individual plan and go onto a Medicare plan.
Love it.
Okay. There are some things now. There's some recent legislation that's changing this. They're called short-term PPO plans. We used to be able to kind of re-enroll you every 6 months, a year. That may not be the case in the future. They're talking about limiting how long you can be on a short-term plan. But again, call us and we can answer those questions for you.
Absolutely.
I think the number one thing, Lee, to kind of wrap up is, when should someone call us? Today. Right now, ask this question. With our office, you will not find high pressure. One of the things that we pride ourselves as business owners, as agency owners, is that our team culture is, how can we help you put you in a better position?
Totally.
If we can't put you in a better position, we're going to tell you to stick with what you've got or give you advice on what to do.
And that is a better position. At least you're educated to know what's what, right? If we can give you peace of mind and confidence, that's a win for us. At some point, you're going to come back when we can help you, or because you left with that peace of mind and confidence, you're going to send your spouse who's retiring soon, or your son who needs health insurance, or whatever the case might be. And frankly, that's just, again, the best way to do business.
Yeah.
If you're going to have happy clients, you just take care of people, then you don't have to worry about things coming back to bite you in the butt, right? So that's what we really take pride in, is just making it easy for people, being the best educators in Southeast Idaho when it comes to Medicare, health insurance, these life insurance things, and taking it case by case. What do you need? What's important to you? Because we have solutions that we can customize for you.
Yeah, and you can get that information by calling us. You can get that information by going to our website, tetonmedicare.com. You can like our Facebook page. We put posts on there. There's all kinds of ways that you can access, but I think the best advice is to give us a call. Let one of our agents answer your questions, customize information for you, and then send you on your way.
Perfect. Well, this has been a great conversation.
Yeah.
We've gone over a lot of the questions that we get all the time. So if anybody listening to this or watching this has further questions, again, please reach out to us. TetonMedicare.com. That's pretty easy. Our phone number, also pretty easy, 208-557-1234. We've got 2 offices in the Idaho Falls area, 1 office in Pocatello. But again, we help people in 9 different states. So if it's via Zoom or a phone call, we can do that as well. But if you can't tell, we love doing this. We love our job. Just yesterday, true story, a lady probably had 3 or 4 times where she just went, just a sigh of relief. Like she came in nervous and worried. And it's so rewarding to just, again, put people in a better place. And that's really what we take pride in doing. So if there's anything we can help with, any education that you're looking for, please reach out to us in the ways that we just talked about. But this has been a great conversation. Let's do it again soon.
No, I love it. We're going to do it soon. Thanks,
Sweet.
man.